Well, to get us across the market open and what we can expect from this Asian trading session, really pleased to welcome Jessica Amir from Moomoo. Jess, good morning to you. Look, another record high finish for the S&P 500 and the Dow Jones Industrials. Tell us about it.
Yeah, absolutely. So we've got the bull market entering its third year. I guess I'm in full gas, no brakes mode. And what's led the market higher over the past 2 years, Nadine, appears to be really gaining momentum and fresh legs overnight. And this is despite the US dollar moving up and bond yields holding at July highs. So a bit of caution to the wind, but investors are still plowing into kind of a lot of stocks that can benefit from potential rate cuts, because we did hear from a Fed speaker overnight, Christopher Waller, saying, yeah, the Fed should probably cut and they should be deliberate with their pace of cuts in the coming quarters. So that is supporting stocks, and that's precisely why we're seeing more buying into the AI and semiconductors. We also saw buying, Nadine, in home builders, uraniums, as well as broadening out of all stocks that can potentially benefit from China stimulus. So airlines are up overnight, cargo stocks are gaining fresh legs. Gold seeing a bit of profit taking because we're not really sure the pace or the size of the cuts. So that's something to keep your eye on. And the aluminium price is also up, but there's a bit of concern about volatility picking up in the aluminium space.
Yeah.
But all in all, yep, the bulls are back.
Yeah, they sure are. And Jess, it's so interesting because we do have key economic data. We've got corporate earnings, which will go a long way to justify some of these valuations or not. I mean, what do you make of the momentum that continues in the semiconductor space in particular?
Yeah, it's a really good question. I think over the past couple of days, if we just think about what we've seen in the US with Elon Musk's event, we've had the Optimus, the robot. Some people are saying, sure, they look like humans in suits, but they look pretty robotic. They didn't even have wrists. But the fact is, they're all powered by AI chips. And this leap forth has really showed us about the real need for AI, semiconductors, etc. But we do know, when we think about it, big picture wise, we've got $1.3 trillion in US. That's how much is expected to be spent in the sector by 2032. So this is expected to be a real driver for earnings growth, given we're expected to see, money flowing into the sector at a CAGR of 43% over the next 10 years. So investors are really buying the dip. We still have semiconductor ETFs, SMH, for example. They're still moving back towards record all-time highs. But when we think about what we've seen in NVIDIA, with their shares now, almost outpacing Apple. Again, they just need to grow some $200 billion in market cap, and they will officially become the world's biggest company once again. But I think this time's going to be different, Nadine. They'll probably stay at the top for longer, given the pace of their earnings growth coming is expected to outpace Apple. So I think this is a real wait and see moment. But I do think, regardless, the S&P 500 is expected to continue to move up into its third leg. We do know if we've seen a bull market rise of this magnitude, it's been followed by subsequent gains. And the average bull market is 180% and spans 5 years. So we're only just 2 years into this bull market. So expecting upside, I guess, in the broad S&P 500, but the most upside if you look at earnings growth in semiconductors and chips.
So does that mean that there aren't going to be any hiccups in this final quarter of 2024? Do you have any sense of caution, Jess?
Yeah, absolutely. It's nothing is certain. Death and taxes, as they say. But we do have bond yields pricking up, and the US dollar pricking up as well. And they're back at levels where we started to, see investors a little bit cautious and taking profits off the table. So it's very natural to to see profit taking. But I just would think, particularly with the AI and semiconductors, the bulk of their earnings, particularly Nvidia, don't come out until a very tail end of earnings season. So that's one thing to keep in mind. The other thing is when the market has taken a step down and headed further south, it's typically been on the back of stronger than expected jobs data. And indeed, we're waiting to see what the jobs report will show in the US this week. So will that be a catalyst to take profits? But regardless, we've got to remember that there is going to be dip buying. There always is. Our markets don't go up in a straight line. So we do need to remember investors will be buying into any pullback, as we've seen, but really be cautious here because we've got these red herring moments spiking to July highs. So lots of caution, but for the most part, everyone's plowing through at the minute.
Okay, and we've got U.S. earnings, as I've alluded to, that we will get through over the next few weeks. So here locally, we are expecting to see a lift at the open. Jess, we will be watching the energy space, though. We saw oil down by 2% through the overnight period. Anything else we really need to be watching closely today?
Yeah, so I think gold is probably going to be a little bit on the nose, along with oil. And I guess oil is a very different scenario. We did see imports falling far more than expected from China yesterday. And so people are a little bit concerned that China's stimulus might not be hitting the road as yet. So we are seeing demand expectations soften. And this is another catalyst for oil to pull back. But nevertheless, oil is still one of the best performing sectors month to date. So that is something to keep on your radar. It's probably worthwhile also noting that some oil stocks like Woodside, along with Whitehaven, are paying some pretty sizable forward-looking dividends. So you might be expecting some potential dip buying if people do want to, get a dividend yield in their portfolio. That's something to consider. Also, aluminium prices are moving higher. Lots of talk about backwardation unwinding. And so there is caution that aluminium, demand could be slowing. That's something that we do need to keep on our radars, particularly with the likes of South32 and Rio Tinto. Just be mindful of that. And then also gold is up by 60% in 2 years. So it's almost on par with the S&P 500's rally over the same duration. So just really be mindful that our gold could potentially have a pullback here and could consolidate because we're not really sure when exactly the Fed will cut now that the Fed fund futures aren't fully pricing in one single rate cut over the coming meetings. So there's a little bit of caution and perhaps reason to take some profits, maybe also buy into gold's weakness here. And also, Nadine, it's worthwhile pointing out that there's lots of talk about some surcharges. The Australian government is prepared to ban debt credit card surcharges by January 2026. So companies like Credit Corp might be on your radar, and also keep an eye on the smaller banks. Obviously, this means that they may potentially be earning slightly less margins. That's something to keep on your radar as well.